India's insurance landscape is going through a massive transformation. The annual report from IRDA for the year 2024-25 is officially out. It reveals a sector that is not just a number, but it is about technology, transparency, and a mission to cover every single Indian by the year 2047. Hi, I'm Akshay Bansal, and today we break down this data, the reform, and the future of insurance for you. India's insurance penetration currently stands at 3.7%. Out of this, 2.7% comes from life insurance, while 1% comes from non life insurance. While we are the 10th largest insurance market, we are significantly below the global average of 7.3%. Though the density grew from $95 to $97, it still remains far below the global standards of $943. Our finance minister recently noted in the parliament the goal is not just growth, but Bima Sabki Raksha, bringing the marginalized into the financial safety net. The almost $850 density gap of insurance represents one of the largest untapped market potential in the global financial sector. In other words, we can say that India is not oversaturated but underserved. In the budget 2025-26, the FDI limit has been increased to 100% from 74% for this particular sector. This is a strategic shift to bring in the global capital to solve the capital starved nature of this particular sector and push penetration towards the global levels. Now let's see how the distribution model have changed over the last 1 year for this sector. Individual agents contribute 31% to the total count, is still the single largest channel for retail trust. Government's dominance through massive social security schemes contribute approximately 24%. The balance 45% is contributed by web aggregators, insurance brokers, and corporate agents. Insurance brokers have been the preferred channel for high value corporate health insurances and industrial risks. Corporate agents, through banks, utilize their depositors' database to sell products like health and personal accident insurance, while web aggregators capture the high intent digital native DIY urban consumers. From this, we can infer that the industry is moving in a phygital model. The 18.66% increase in the agent field force for standalone health insurance companies, bringing the total to approximately 15.5 lakhs, shows that even in this digital era, human intermediaries are essential. Standalone health insurers registered a net profit of 762 crores and the lead in the retail innovation. Private general insurers racked up a massive profit of 8,150 crores. The report highlights a critical solvency bridge. The three major PSUs, National, Oriental, and United, recorded a negative solvency ratio. It is well below the IRDA's mandated solvency ratio of 1.5. In the Sabka Bima Sabki Raksha Bill of 2025, the government has proposed composite license for insurers. This will allow a single entity to sell life, health, and general insurance products. This is designed to save the cost for the PSUs, and also it will help the private insurers to create bundled products. Now let's deep dive into the report from travel insurance. This is the first time IRDA has decoupled domestic travel insurance and overseas travel insurance. Interesting to note is that almost 60% of the domestic travel insurance are happening through embedded model. That means that the policies are being sold only through the platforms where people can book a ticket online. Overseas travel insurance have seen high severity claims like medical emergencies or evacuations. The claims ranging between $1,500 to even $50,000. While in domestic travel insurance, the claims have been related to baggage losses or trip cancellations. Now let's break down the personal accident insurance from the report. The Pradhan Mantri Suraksha Bima Yojana is the largest driver for personal accident in India. It provides 2 lakh of a cover for mere 20 rupees of annual premiums. But the retail personal accident is evolving. Private players are moving away from accidental death covers only and are covering permanent total disability, permanent partial disability, and even providing educational grants to the dependents. The incurred claim ratio for personal accident is the most favorable in the industry, making it easier for private insurers to cross sell it with motor insurance. The Insurance Amendment Bill of 2024-25 also proposed to reduce the minimum capital requirement from 100 crores to just 50 crores. So I was wondering that it might not be a far-fetched dream when a new startup comes up only for personal accident insurance and providing coverage to all the kind of gig workers. Now let's talk about Bima Sugam, which many are believing is the UPI moment for the insurance sector. The platform Bima Sugam is the centerpiece for the Bima Trinity: Sugam, Vahak, and Vistar. It will be the universal marketplace for buying insurance and also settling down the claims. The insurance industry has accepted AI with open arms. Insurers are now using generative AI for negative news screenings and image based damage detection for accidental and motor related claims. The AA framework allows straight through processing. By accessing your verified bank account data, insurers will be able to issue policies within seconds without the need of a manual KYC. In the year 2025, our finance minister highlighted the need to simplify the KYC process.
Process will be simplified, adopting a risk-based instead of one-size-fits-all approach. The financial sector regulator.
A revamped CKYC registry will facilitate seamless onboarding through the entire Bima Sugam platforms. By removing the friction of documentation, IRDAI is moving towards a world where a claim can be settled using AI only through a smartphone. Based on IRDA's report, the incurred claim ratio is a pivotal metric. It is used to evaluate the efficiency and the operational sustainability of the insurer. It represents a ratio of the claims incurred versus the premiums collected. If I talk about segmental ICR, so PSU insurers have recorded ICRs generally beyond 100%. This indicates the claims that have been paid out and the outstanding claims are higher than the premiums that have been collected. Private general insurers have typically maintained a more balanced ICR. This has been made possible through tighter underwriting and digital claim processing. Standalone health insurers have rather shown a very competitive ICR, benefiting from their specialized focus on health product and their robust network hospitals. Now let's look at few insurers and how they have evolved their business in the last 1 year. Star Health and Allied Insurance has been the leader when it comes to retail health insurance. Care Health Insurance has shown strong growth in individual agency channel. Niva Bupa has been the leader in bancassurance and digital channel. ICICI Lombard is the leader in the private general insurance category. Bajaj Allianz has shown great performance in the group insurance sector. Tata AIG has shown a very promising growth in the travel and health lines. To conclude the roadmap of insurance for all in the year 2047, 100% FDI, composite license, and Bima Sugam will be the three pillars for the great deregulation of this industry. This report not only shows the data for the past 1 year, but it actually prepares the blueprint for a risk-protected India. The data is clear, the laws are changing, and the technology is also ready. But ask yourself, are you covered adequately? You can get in touch with us, the Money Plan Project.